What is up, guys? Taiki here, and it's a Monday, so it's time for a market update where I give my thoughts on the markets and the strong and weak narratives that's either supporting or not supporting the markets, right? So headwinds and tailwinds. So this is going to be the agenda of the video, so let's get right into it. I'm still a little sick, so sorry if my voice is weird or I don't. I guess like my pronunciation of some words are not good, but let's get right into it. None of this is financial advice. So kind of following up on my last video, right, and my short-term bullishness, and it kind of goes along with, I guess, the narrative of Do Kwon, the Luna Foundation guard, and also Michael Saylor, right, just FOMOing in, leveraging up his own company and raising $200 million to buy Bitcoin, right? There is no second best Ponzi. So, with Saylor raising 205 and the Luna Foundation guard also having roughly $850 million, right, worth of stablecoins to buy Bitcoin with, I still think that this narrative, right, that they have $1 billion left in the tank to buy Bitcoin in the near term is going to prop up the markets to some extent. And you can kind of see this in the markets, right? Even though Bitcoin hasn't actually performed that strongly, it's still, propped up the markets enough for people to want to go risk on with ETH, Luna, and also NEAR. And, I guess like one of the risks of this narrative is like the narrative exhaustion, where maybe once the Luna Foundation guard runs out of coins to buy Bitcoin with, like maybe people will start to de-risk, right? So this was a screenshot from last week, but now this screenshot from yesterday. So in late March they were really aggressively buying Bitcoin, right? Like every day, every other day or so. But recently they've kind of slowed down their Bitcoin buys, and maybe this is a warning. Who knows? You can kind of see this on Twitter, right? Some people are like, "Oh yeah, like Do Kwon, like he's not buying Bitcoin because he wants to buy lower. Like it's gonna dump, right? Maybe that's what's happening, right? There's no way to know because these buys happen off doors, in closed doors, and we don't really get to see like when they're gonna execute their buys. But look at this trend; it's still like pretty strong, right? And when it comes to these narratives, I feel like the narrative of them buying roughly $1 billion worth of Bitcoin is more important than the amount of buying that's actually happening, right? Because the narrative that hey, Do Kwon is gonna buy, and Saylor is gonna buy, I feel like dissuades sellers from selling some of their tokens. And it also allows people to go risk on because if Bitcoin doesn't dump, then my altcoins might do well, right? So I still think that in the short term it makes sense to not be too bearish, but I think it's good to have a plan on when to be bearish, when to take profits, and when to know when my when my short-term thesis is wrong. I guess the concerns I have with the Luna Foundation guard is, of course, aside from the narrative exhaustion, is that we're still a long ways from $10 billion. And if you understand how the Luna Foundation guard can actually buy Bitcoin, they can only do so when the curve pool is unbalanced. Because right now the curve pool is balanced, meaning that they can't take their UST, convert it into stablecoins to buy Bitcoin with, right? They can only mint UST and swap for stables when UST is over peg, right? When there's significant demand. And I guess compared to last week, there's been more demand for UST, which is good, right? But because the curve pool is balanced, they can't mint more like stablecoins, right? So what they have, right, the $850 million is all they have to buy, right, in the short term. Even though I would expect more billions of dollars to be raised, throughout Q2, Q3, etc. Okay. So, like I said, not going to fade this in the short term, but best to be aware when, this narrative might be exhausted. I don't think it's there yet, but it's always good to be aware of, okay, how strong is this narrative? Is it weakening? How long can it last, etc. For me, a lot of the strategies I have in mind is to be short-term bullish, but to be more cautious as more time passes. And I look forward to taking profits into ETH and stablecoins, right? ETH because of the merge narrative, right? I think it's strong. It's lower beta, meaning that even if the market's dump, it's going to dump less than certain altcoins, and also stablecoins, right? I just want to raise more stablecoins. I think it's always good to have a plan. You really don't want to be that type of guy that's like, I'm going to sell 10% higher. Just one more 10% pump and I'll sell, right? You really don't want to be that guy because, that mentality is going to get you wrecked. You have to ask yourself, what did the markets teach you in May of 2021? What did it teach you in November of 2021? Because these were very different types of, crashes, right? Because in May, you just wake up and you lose 30% of your net worth, right? But November, right, we had a 5-month stretch of just down only, right? And you want to be prepared for all scenarios, because if you didn't learn from your past mistakes, then frankly, you're probably not going to make it. You have to apply what you learned to your future self and don't get too greedy. For me, I think having a stablecoin stack is always nice. I think, everyone should learn to enjoy taking profits, right? It's okay if you sell something at $10 and it goes to $20 like next week. It's totally okay, right? Because at the end of the day, we're trying to earn more fiat, right? Maybe that goes against the Bitcoin ethos, but we're trying to earn more fiat. And I think it's always good to have hedges on to maximize your sleep-adjusted returns. I think rationally as humans, we want to maximize risk-adjusted returns, right? But for me, sleep-adjusted returns, right, may have more merit if it helps you, get less stress or something. So I've had a lot of questions about how to hedge, and I have a video on GMX and GLP hedging, right, with Aave. I'm not going to touch on it in this video, but the concept is you can have collateral, right? Let's say you have ETH as collateral that you want to sell, but you don't want to realize capital gains, right? Because taxes in DeFi is kind of ridiculous. What you can do is you can use it as collateral, borrow ETH against it, and sell the ETH that you borrowed, right? Because you essentially achieve the same effect, but you don't realize capital gains on your collateral, right? And what I've been doing is, or what I did, right? I no longer have this on, but I borrowed ETH and I put that ETH in the GLP, and I was farming AVAX and GMX, basically, And also stable coins, right? Stacking is always nice. I think everyone should have a stablecoin target, right, for the portfolio. Maybe yours is 20%, right? But it's always nice to have a buffer, right? Because if you're at 20% already and you see a new play that you want to ape, then you're but I don't want to sell any of my coins that I currently own, and I also don't want to get below 20%. But if you have 25 to 30%, right, a 5 to 10% buffer, then you can always take those stable coins and deploy 2, 3, 4%, whatever you want to do with it. It always offers flexibility, and I think flexibility is everything in crypto, and I think that's the power of DeFi, right? Different ways to manage portfolios. So my plan is to be short-term bullish, but de-risk on the way up, right? Some altcoins like Luna and NEAR has performed really well, but I have profit-taking plans for everything in my portfolio. I don't care if I'm I don't care if I sell the top or something, right? And if the markets are midterm bullish, right, and it defies my expectations, then I'll just buy higher, right, and be okay with it. There's always going to be opportunities. There's always going to be opportunities in crypto. You don't have to hold things to 10x, right? Having a 3x and then 3xing again, right? That's a 9x, right? I feel psychologically we want a 10x, but what you should want is to just maximize risk-adjusted returns. Okay, so that being said, let's kind of move over to NEAR, right? NEAR has outperformed most L1 tokens, and I haven't covered NEAR, right? And I've gotten a lot of angry DMs and even emails about NEAR, but I think this is a good time to cover NEAR, and why I'm still positive on NEAR, and kind of revisiting my Q1 thesis on NEAR, what went wrong, and I guess how I think about the future. I guess I'm kind of moving the goalpost, right? Because I expected NEAR to do well Q1, but now I'm saying April and May, right? I still think it'll do well, but I think there's a fundamental reason why that happened, and it kind of goes over. I'll touch on this later, but the Russia and Ukraine situation, but. I'm still really, really optimistic NEAR, right? I think it's, they have an amazing team. They have amazing backing, right? People hate VCs in crypto, but I think VCs are necessary. And the technology is, really, really compelling. I feel I feel like NEAR is one of those coins, or I guess that ecosystem, is underowned and underappreciated by the wider crypto community. Because, if you think about YouTubers, influencers, Twitter influencers, whatever, right? Everyone likes Solana, everyone likes Luna, everyone likes AVAX, everyone likes Phantom, right? And I guess I'm a Luna shill, right? But I guess would you rather me shill Luna or Phantom, right? I feel Luna and NEAR has done well. I feel there really isn't a public figure, a big one, that's really big on NEAR. I guess I'm one of those, but I feel I haven't really made that much content. But I'll kind of talk about why I'm so positive on it, and going over I guess the technology. So I'm not going to spend too much time on this, but I think the way that their their ecosystem and tech is designed is really compelling, because we have NEAR, right, which is a Rust based smart contract application that scales horizontally via sharding, right? That's kind of how ETH 2.0 plans to scale, right, in maybe 2024 or something, right? So they're already ahead of ETH in terms of horizontal scaling. And then we have Aurora, which is an EVM chain that is built on top of NEAR as a smart contract. And similarly, Octopus, which is a substrate-based smart contract network, which is built on top of NEAR. So we have NEAR, which is an ecosystem with a vibrant developer community that can, I guess, accommodate both Rust, Solidity, and Substrate smart contracts. And even though they're not composable yet, they are going to be composable, and they'll be able to communicate with each other in the future. And I think there's a lot of like potential applications that can come out of this that I think will be pretty positive, right? And Aurora, right, because it's a smart contract on top of NEAR, inherits the scalability and security from NEAR. So if you believe in, I guess, like the scaling roadmap for NEAR, then it's fair for you to be bullish, like a scaling roadmap for Aurora as well. There's also NEAR University, right? You can go to near.university, where if you want to be a developer, right, and you want to build on top of NEAR, then there's a bunch of courses that you can learn, right, how to build on top of NEAR, right? And I think NEAR focuses on both developer and the user experience, which I think is important, right? Because I know how to use MetaMask, but teaching someone else to learn MetaMask is it's definitely a pain, right? I would not want to teach my friend how to use MetaMask for sure. But I think NEAR, the wallet, even though the NEAR wallet kind of sucks right now, I think they're trying to improve that over time. And also we had the Meta Build hackathon, right, that recently concluded. It had almost 4,000 participants, right, developers, with $1 million in prizes, right? $1 million, not too much, but what you should know is that NEAR has a lot of developers building on it, right? We don't hear about it, right? I say we as an American because, most of these developers are based in Europe and Asia. If you're in the US, you constantly get showed like Solana, right? Because you're based in the US. But it's something that I think is underappreciated. And I feel like it's a similar setup to Solana in early 2021, right? If you go back to Solana, it was similarly scalable Rust-based Rust-based chain with a bunch of hackathons. People didn't fully understand it, right? Myself included. But the developer adoption led to more user adoption, and Solana pumped a lot, right? I'm expecting significantly, right, with the capital S, lower returns due to NEAR already being a higher market cap. But I still think throughout 2022, I think the risk reward is pretty good. In the short term, I have no idea what's going to happen. But NEAR is more of like a 2022 play for me, just because I think it's underappreciated. And I feel like that's where most of the alpha resides, right? Is there any alpha in buying AVAX, right? Probably not, right? Even though I expect Avalanche to outperform, 5 years from now or whatever. And touching on the Q1 thesis and why it didn't play out, right? Of course, the macro was weak, so maybe that had a part to do with it. But part of my Q1 thesis was that I expected a lot more applications to launch on Aurora in February and March. But obviously, we had the Ukraine-Russia invasion. And if you think about what I talked about earlier, a bunch of developers are based in Ukraine and Russia. And because of the invasion, it caused significant delays for new applications to launch. And because, that situation is less hectic now, I expect more projects to launch on Aurora in April, May, and June, right? Touching on Tri-Solaris, right? I've gotten so many angry emails and whatnot and DMs. But if it helps, right? I'm still bag holding. I've been farming Tri for 3.5 months now, right? If that makes you feel any better, because I still think that the risk reward is pretty good, and I don't want to give any price targets, because I learned that price targets as a public figure is it's gonna get people burnt, but I still hold it, right? If that helps. So for example, the CEO of Aurora Labs is Alex Shevchenko. He's based in Ukraine, and a couple weeks ago he had to make this 25 tweet thread about don't worry guys, I'm not dead, I'm safe. It's kind of sad actually. His brother got injured from the Russian attacks. But I think as crypto participants, we have to understand that devs are people too, and it's not their job to make your net worth go up, right? That's your job. That's our job. We have to manage risk ourselves, right? And I try to do the best research that I can, but I don't often get everything right? I think what I should have done in hindsight was when the Russia-Ukraine invasion happened, I should have foreseen that there was going to be delays and then took risk off and then re-entered, once the situation got better. But hindsight is 2020, and it is what it is, right? And Tri has done okay, right? In the past couple of days or weeks, they recently raised a run from Jump, and I'm not showing this, right? I mean, please don't buy this. I'm just being a degen, and in the past I gave rough market cap target of maybe 100 to like $300 million, right? If we're in like a bullish environment. But because macro is uncertain, I would like significantly tamper your expectations. I think it's better to have like very low expectations and be positively surprised at the upside than to just, have like bullish goggles on and be like, oh yeah, it's gonna pump. So, maybe 50, $150 million market cap. I to be honest, I'm guessing, right? I should probably delete this. I have no clue. Right? I have no clue. I don't really see 2022 as a make it year for most people in crypto. 2021, 2020 was a great year for crypto. But 2022, I don't really see like too strong of like, catalysts. I think macro, lots of bad things happening there. I don't want to LARP as like a macro guy, but I don't think it takes a genius to know that, okay, like maybe risk assets this year aren't going to do as well as they did in 2020 and 2021. So, maybe people don't want to hear this, but it is what it is, right? And maybe what might help you, right, is to temper your expectations, be like, okay, 2022, I'm going to take on less risk and position myself for the future when I guess the markets are more obviously risk on. So then that's kind of how I think about it. And yeah, in terms of like, bullish tailwinds, right? I had this tailwind here, right? The Bastion and Lockdrop. I made a video on it, right? But I think I'm gonna like stop making like farming videos because it's like, it's not that useful. But one of the positive catalysts that come out of the Lockdrop is that a bunch of, I think it raised like $400 million, right? TVL. And the majority of that was USDC. So we have a bunch of USDC that's locked in here. And what that's going to allow is for a lot of people to take on cheap leverage. With the humble farmer thesis, with money markets, they're so important for ecosystems because it allows ways for people to manage their portfolios in more ways, right? I went over the obvious strategy, right? I can like hedge my strategy using money markets. Similarly, people can take on leverage using money markets. So you can use ETH as collateral, borrow stablecoins at a super low cost, and then use those stablecoins to farm with, right? So I think, all these things, right? All these things happening, it's going to create for more velocity in the Aurora ecosystem, which is going to, create for a more vibrant ecosystem. So that's just my thesis, right? I think, for 2022, the two bullish L1s that I bet on was NEAR and Luna. I think they've done really well, right? I mean, they've definitely outperformed everything else in terms of L1s. So I think, directionally I was okay, right? In like identifying that. I didn't play it perfectly, right? I played it poorly, to be honest. But, I think the research was still okay. There's also Burrow, near native lending market. But yeah, let's not talk about that. So, last topic I want to cover is DeFi Kingdoms and Subnets, right? Because this is also a very exciting launch that happened last week. And I'm definitely farming it, right? And one of the concerns that I had for DeFi Kingdoms and the DeFi Kingdoms chain was, are there going to be any incremental buyers, right? Because we pumped a lot into the launch, right? But that's because, people were buying before the launch because they wanted to farm, right? So everyone that is bullish would have already bought anticipating the DeFi Kingdoms chain. So are there going to be any incremental buyers when a thing actually launches, right? And what if subnets like don't work, right? Like, we always assume that subnets are going to work, but like, what if it's slow? What if there's delays, right? So, personally what I did was I sold roughly a fifth of my jewel the day before I launched, and then, allocating 70% to the Jewel X Jewel farm, the farming crystal, and then I put aside 10% for flexibility, right? I think it's always good in this environment to have plans on take profits, managing risk, right? And selling into the hype, right? I sold into the hype, right? I sold at $9, it's above $9, but who cares, right? I sold into the hype in case it didn't launch well, right? And, the reason, I guess like, I'm just like planning to like just hold my Jewel X Jewel in here for a very long time. And that's because, if you think about like the unlock rates for DeFi Kingdoms, it works like this. Currently, we're in Epoch 1, right? If you claim your rewards, 5% of your rewards are unlocked and 95% is locked. If you wait until Epoch 2, then whatever you claim, 7% is unlocked and 93% is locked. So what I did for Serendale and Jewel on Harmony was that like I just waited the longest time to claim my rewards so I can unlock the most amount of Jewel possible, right? Like when I unlocked it, it was a glorious day. I was like, oh, hallelujah, right? Orgasmic. Similarly with Crystal, I don't plan on like claiming my rewards anytime soon. I just plan on just letting it stay there, So maybe like Epoch 20, I can claim like 45% of like whatever, I've been stacking. And that's also going to be another orgasmic, like Valhalla day, right? Whatever you're going to call it. Yeah. Anyway, yeah. So one thing you should like understand is like whenever you like add or subtract LP tokens in these farms, the smart contracts will automatically withdraw your rewards for you, right? So this is bad. This is bad because like if you add your LPs into your Jewel X Jewel farm, it's already gonna claim your rewards. So that's one of the reasons why I just plan on letting my X Jewel and Jewel sit, and just so I can like accumulate as much crystal as possible. Hopefully that made sense. And touching back on NEAR, right? In my my Q1 prediction, I said NEAR is probably gonna flip Polygon, right? Because who the hell holds Polygon aside from like ETH maxis and like ETH influencers? And if you look at the CoinGecko ranking right now, it's really close, right? It's really close. And I think it's pretty impressive because even though the markets have been pretty weak and it's like the crypto markets have been pretty bearish, NEAR, its market cap has been pretty steady, right? At roughly 10.5, right? And it's essentially the same market cap. Whereas Polygon has lost roughly a third of its market cap, right? From 17 billion to roughly 11 billion. So I think that kind of shows the strength and quality of NEAR. And I still expect good things to happen to NEAR in Q2, right? Yeah, so in terms of NEAR, right? If you want to understand the technology and I guess the community better, I suggest giving him a subscription, right? Alejandro, he has a great channel. He covers the NEAR ecosystem. I'll link this in the description. I thought this was a really good video. Yeah, so he kind of goes over like more of the tech, I guess. In terms of narratives, right? I moved the Jewel Avalanche subnet narrative here because it already happened, right? So there's gonna be significantly less hype. And Bastion Lockdrop, right? I still think the merge and the Bitcoin narrative is pretty strong, right? And I'll kind of talk about like the heavy headwinds narrative over here, right? So obviously Harmony, right? Like they had like 6 months to like support DeFi kingdoms, but the RPCs were it doesn't scale. They were too busy building their native Bitcoin bridge instead of like creating RPCs for DeFi kingdoms. I think it's going to face significant headwinds. Like if you're building a game, right? Like, would you rather build on Harmony or Avalanche or even on NEAR, right? Or like Aurora, right? Like, I feel like developers are going to flock away from Harmony. And this is kind of like a boomer narrative, right? But the yield curve did invert, right? The yield curve did invert. And historically, this has predicted every recession 6 to 24 months into the future. So, historically, like, this is actually like, if you look at like historical performance on markets, they actually tend to pump after yield curve inverts. But I'm just like highlighting this because it's definitely going to be like a boomer narrative that we're going to be hearing about for the next couple of months, right? Can low mid caps pump in a rising rate environment? And the yield curve inversion means we'll hear, ooh, recession might come for like the next couple of months. And I think that's going to be a headwind in the markets that we cannot ignore. So anyways, how long is this video? 23 minutes. Okay, not too bad. But that's kind of how I'm viewing the markets. Like, I think I've done pretty well, right? In terms of my portfolio, or I guess like my picks. Even though I didn't play Tri-Solaris to the best of my abilities, I think the fact that NEAR has outperformed most targets, like most tokens, makes me feel good about like how I'm seeing narratives and fundamentals. Obviously, Terra, right? Like that's also been my other bet. But I think in terms of in terms of like bridging data, right? I think NEAR, I expect this to get to go higher, right? And DeFi Llama, let's go here. Aura did not get to $1 billion TVL, right? But it got to like roughly $800 million in TVL, and I think for sure, right? Like I think in April it'll get to $1 billion TVL, and I think NEAR as an ecosystem is not something you want to ignore, right? Yeah. So thank you guys for watching. Have fun forming out there, and let me know what you think about this type of content, right? I feel like as my channel gets bigger, I have to kind of adapt the type of content I'm making. I can't make the same types of videos forever. That's called being complacent. And I feel like as my channel grows bigger, it doesn't really make sense for me to like talk about like one-off farms, right? Because if it's a good one, then it just gets diluted and like people get angry at me. And if it doesn't work, then, you know, people get wrecked and they get angry at me. So, you know, my personal picks for altcoins and like farms, I'll reserve that for like the private Discord. But for the public channel, it's going to be more focused on like macro narratives, like macro trends. I still think this is helpful. So, you know, hopefully this is more useful. And, you know, yeah, hopefully it's more useful. But yeah. Anyways, thank you guys for watching and have fun farming out there.